Hello and welcome back everyone. Today is the 28th of October and it's 6 minutes past 10 UK time. So today's update on all the pairs, we're going to start with Euro CHF. Euro CHF. We were anticipating a sell. Okay, so what we're going to do here is this blue line of reference of recent support area, we're just going to move it down to the next support zone, which is here, and we're just going to leave it like that until price actually moves back over, and possibly we might get a trade set up going to the downside. So we're going to quickly move on to Euro USD. Now looking at Euro USD, as you can see, I was in a trade 2 days ago, and as you can see here, this is where I actually got into the trade, and I was explaining that that I don't buy straight away market order. I always buy limit sell. So price actually came back, pulled me into the trade, and I did say that we should never move our stop loss, and we should always keep our stop loss where it is, so it prevents us from losing more than we actually agreed to lose in the first place, if that makes sense. So you can see what happened here. Price decided to come back and retest this zone. Now this does happen, but it doesn't happen that often. People think, oh well, stop loss is always getting hit, and Forex is a joke, and you've got other things that people say about the market, but it's all to do with your understanding. This is what I personally think. If you look at the market as in a negative way, then the market's always going to be negative to you no matter what you do, and that will deter you from trading. And I did explain that in yesterday's video, that I do not, I don't consider that like I don't have any feeling towards the losses that I take. It's just, that's just part of the game. I know how the game works, and that's just part of it. Losing trades are part of trading, and you can never change that. So I actually placed my stop loss was right there. As you can see, it was just above these highs right here, and I had a trade for 2 to 1. So if I lost 1, and if I won the trade, if the trade was going in my direction, I would have got double the amount that I lost, plus I would have carried on moving my take profit further down and moving my stop loss further up, and just keep on doing that until I get more than I actually targeted. So unfortunately, market had other plans, and price came all the way back up, and as you can see, this is a very, very strong bullish candle. So what this could be is either institutional trading. A lot of people do say that it could be, the big boys, the banks and institutions, corporations and stuff like that, and it's just some people say it's like a stop hunt and all of that stuff, but you should understand that the market needs money to move. So even if the market wants to go lower, it needs money to move the price lower. So it will come back up and try to grab liquidity. So liquidity is our people's stop loss and stuff like that, you know, orders and I'm not going to get into all of that stuff because it just goes, you know, it takes a long time and there's a lot to it. So just if you want to look into liquidity and all that, you could always type it into Google and you know, you could read through everything that's there and then you'll understand. But regardless of these things happening in the market, you should still follow your rule. So I never moved my stop loss. I never moved it. It came up, it hit it. So what? You know, tomorrow's another day. You preserved your capital. You didn't lose much, and you know you're good to go for the next day. So that's what trading is in a nutshell. It's about preserving and increasing the capital that you have. So where does this lead us now, since as though our stop loss has been hit? Does that mean that market is going back up? Not necessarily, because as you can see here in the weekly, this is looking like a classic pullback. So as it pulled back, it's possibly going to be testing up here, or it's just going to stay around here, and then finally it's going to start coming back down again. This is what this is my opinion. Whether it's going to come back down or not, I don't know for certain, but I believe that it might come back down again, but I could be totally wrong. So on the daily here, I can see my price below the 50, but it's above the 10. Okay, so because it's above the 10, and as we can see, a break of this high has happened. Before I place a buy order here, I'd like to see price actually move above the 50 moving average, and then I'd like to see a beginning of a uptrend. So what I would want is initially price to move high, and then price to form a pullback, and then give us a buy signal so that we can take the market for a buy. Okay. In order for that to happen, we'd also need to see the bullish bias on the weekly as well. So far on the week, if you look on the weekly, the overall trend is down, and on the daily, this is what we're waiting for. I'm anticipating that because it's come up now, it might go back down, then give us another sell signal, and maybe that sell signal is going to be the one to take us down into profit. So we'll just have to wait and see. Okay, I'm going to move on to AUD Chef. Okay, AUD Chef, as we can see, we have not got any sort of break of this level here. We actually got a bearish candle. So what we're going to do, we're going to carry on waiting, and we're going to see what happens. We're not going to get into any trades. We're not going to rush into any trades. Some people might get into trades looking at these spikes here. They might have other strategies, methods of getting in. With the method that I use, looking at these spikes is not an indication for me that price is actually being rejected and it's moving down. So we're going to move on to the next pair, which is the AUD Jpy. On the AUD JPY, we are looking to buy this market, and we have not got okay, so so we don't have a break of this high at the moment, so we're just going to carry on waiting. We're going to carry on waiting until there is a clean break. So move on to the next pair, which is the Chef JPY. Okay, so now we can see there's a break here. Price has actually broken above. So what I'm going to do here is I'm going to just see possibly where this price is wanting to go. Okay, so oops, what's going on here? Okay, okay, so we just have this high over here, and last time price went there was in 2014, and then we had a massive sell-off, and then slowly but surely price started moving back up again. Okay, I'm gonna just wait. Just let me see something here. I'm talking about there. Is this what we're talking about? Okay guys, what I'm gonna do actually, we're gonna leave this one. Because I'm not sure about this one, so I'm gonna leave it, and we're gonna move on to the AUD card. Okay, the AUD card. So like I said, the AUD card here as well, as you can see, for me to go for a buy, I want the price to actually go above here, and I'm willing to wait, whether it takes a week or 2 weeks or however long it takes. It's better to be on the right side than to be on the wrong side and lose. So let's see what happens, because you can see these they are sign of rejection. So you just want to be sure before you actually enter that you are entering in the right direction. Okay guys, I'm just gonna stop the video here, and I'll see you on the next part. It will just take a second.